Today, the crypto market takes a break from the recent rallies. World leaders urge crypto exchanges to cut off Russian oligarchs. And can the US enact crypto regulations this year? Welcome to CNBC's Crypto World. I'm Tanea McKeel. The crypto market is in the red today, falling an average of 3% by noon Eastern. Investors are keeping a close eye on the war in Ukraine and Fed Chair Jay Powell's calls to raise interest rates this month. Bitcoin traded 4.3% lower in the past 24 hours. It was worth about $42,000 per coin. Ether fell more than 5%, and XRP managed a smaller loss of 3.5%. To get more context on the crypto market, I spoke to Valkyrie Investments CIO Steve McClurg. Here's what he's watching.
I think Bitcoin is remaining strong at this level. We've established a key support above 40,000. There's a lot of speculation that not only are we going to continue to get movements out of things like the ruble and the hryvnia, but also other currencies into Bitcoin as people use it day to day. They use it for protection. They use it for fleeing countries, which is quite a sad situation. But it really is a way to store value for people to leave quickly. Bitcoin really has behaved as people trade it. If people are trading it as a risk asset, then that's really the way that it's going to behave. And we've really seen a correlation closer to the S&P 500 or even NASDAQ for Bitcoin in the last couple of years, because that's how people have been trading it. They're including it in their portfolios. When there's news that occurs that's outside of the regular trading day, Bitcoin gets hit first, whether up or down, because that's a market that's available 24/7, and it's where people can take that risk. What I think is going to happen going forward is it's really going to behave a little bit more like a commodity. So Bitcoin's correlation to different assets changes over time, but I really see it behaving more like a commodity in the next year as opposed to U.S. equities.
All right, let's also talk about some of the crypto headlines. First, Ukraine just canceled its airdrop for those that donated to the country's war effort. Now, if you're unfamiliar, an airdrop is a free gift, like a token. It's sent to users to encourage them to contribute to a project. The Ukrainian government promised that anyone who donated to the country's crypto wallets by 11 a.m. Eastern today would receive a gift. But just today, Ukraine's vice prime minister said the drop was canceled after careful consideration. The country instead will issue NFTs. Ukraine has now received crypto donations worth more than $54 million, according to Elliptic. NFTs are reportedly on the SEC's radar. The regulator is probing the NFT market to determine whether they should be considered securities, according to a report from Bloomberg. Commissioner Hester Peirce warned back in December that such a move could be coming. She told CoinDesk that given how widespread NFTs are, it's likely some could be classified as securities. Lastly, with crypto trading volume in Russia surging, leaders in the EU and US remain worried oligarchs could circumvent sanctions. Christine Lagarde, head of the European Central Bank, called for legislation to prevent crypto exchanges from operating in Russia. In the US, the Biden administration and the Treasury Department have been scrambling to track down assets belonging to Russian oligarchs, including crypto transactions. With the growing concern of Russian crypto use, the calls for new laws have been growing. As we mentioned yesterday, Fed Chair Jay Powell said now is the time to act on crypto regulation. Even Sam Bankman-Fried of FTX said regulation was needed before Bitcoin's next big rally.
By far the biggest thing here is regulation, and in particular, the US regulatory environment. Like, if you look at the largest trading institutions, what are they waiting for? What are banks waiting for to get involved? I think it's basically entirely clarity on the regulatory side. Even just sort of like some amount of uncertainty in the regulatory environment is enough to scare them and make them feel not super comfortable getting involved.
Still, there's so much to figure out. Which agency is best suited to regulate crypto? How do we handle assets like stablecoins? I spoke with Todd Cipperman of Cipperman Compliance Services to answer these questions. Thanks for joining me, Todd. Given the events of the past week, it seems sort of inevitable that increased regulation in crypto is on its way. How are you feeling about that at this point in time?
I think it's great. Now, I'm not happy with what's happening, and I'm not happy about the events that might give rise to more regulation. But I really believe that regulation is the best thing that could happen to the cryptocurrency market, cryptocurrency world, the blockchain. I think the Wild West reputation it has is actually holding back its growth.
Who is best positioned to do that? Crypto, Bitcoin is still really young. The industry is still really young. And for a long time, with Bitcoin specifically, we haven't really been able to peg it to a narrative. And I think that more people are becoming more open to the idea that it doesn't have to be one thing, it can be several things. I think the events in Ukraine this past week have only emphasized that. We see it's trading like a risk asset. We know it's supposed to behave like digital gold. We're seeing it used as cash now. So, we haven't known under whose jurisdiction in the US it's supposed to fall. What do you think?
Yeah, and I think it's interesting. The pronoun "it" is a very interesting one, right? There's what is it, and I sort of divide cryptocurrency, the blockchain, digital ledgers into two camps. There's the sort of the thing that you invest in, the various cryptocurrencies and the coins that people are investing directly in. And that's interesting. To me, that's less interesting than the use of cryptocurrency as a payment mechanism and a security settlement mechanism. And I think those are sort of maybe two different things and require two different types of regulation. Having said all that, I'm a little bit biased. I think the right regulator here is the SEC. And let me explain why. I certainly don't think it's Congress. I think there might be some guardrails that Congress puts on, but this is too much of an evolving financial market product. And this is exactly the reason you have regulators like the SEC or the CFTC, as the case may be, who are there to be market experts, to be product experts. The Congress sets broad rules, and then the regulator, who are experts in this stuff, they watch it evolve and they adjust regulations accordingly. That's why it's easier to regulate than it is to pass legislation.
There's been a lot of focus, a lot of debate about the idea of using cryptocurrencies to evade sanctions imposed by the US. I know that before, regulation was pretty heavily focused on stablecoins. Where do you see this going now? Where do you see the focus shifting? Are we reverting back, or do we have something new that we want to concentrate on?
That's a big question, and I think the focus should be more about anti-money laundering regulation than specifically cryptocurrency regulation. Now, where the two connect is whether or not current anti-money laundering regulations apply to cryptocurrency transactions. That's really the nexus of these two. This reminds me a lot, and I'm going to go back maybe to post 9/11, and right after 9/11. Basically, any financial transaction coming out of the Middle East, everyone raised red flags. It didn't mean they didn't get done. It meant that's when all the OFAC checking came in. That's when AML came in, suspicious activity reporting. This feels a lot like that. All of a sudden, everything Russian has a negative taint to it. So the question becomes, how do we choke off illegal activities? Well, what happened back after 9/11, and what I think should happen now, is all regulated markets should implement anti-money laundering legislation and regulation with respect to crypto transactions. FinCEN has already, in the United States, has already moved in that direction. And any exchange that engages in crypto has to follow the anti-money laundering rules. I think the SEC the SEC and the federal government need to take leadership across the world to try to convince other governments to do the same thing.
What are your thoughts on President Biden's executive order on crypto? There's been a lot of anxiety around that. I've also heard a lot of people say, hey, whatever comes out of that report, it will bring less confusion to the market. So whatever it is, it'll be a good thing. What are you thinking? What are you hearing?
Or more confusion. I'm a little surprised, to be honest. I'm not a political analyst by any stretch. This seems to be a little bit below the president's pay grade, if you will. These are the kind of issues that need to bubble up rather than bubble down. And it just seems to me there's just too much dynamism in the market right now for the federal government. It's really at the executive level to make any grand pronouncements about regulation. You said it yourself already. There's even a definition about what is cryptocurrency. Is it a currency? Is it a payment mechanism? Is it an investment? Is it fiat? I mean, nobody really knows. And I don't know how you would issue executive orders or any kind of directive from that perch.
Before we go, we want to let you know that tomorrow we'll be having an interview with Kraken CEO Jesse Powell. We'll talk the push to crack down on Russian crypto transactions and more. You won't want to miss it. But you're all caught up for today. We'll be back again tomorrow with more, and we'll see you then.